Hello guys, hello my viewers all around the world. How are you all doing today? If you're all doing fine. Today's video I'll be showing us a new strategy, a new trading strategy. It's a very simple strategy. I've been working on it for a while now and I've mastered how it works. So I want to show you guys about this strategy. This strategy works for all financial assets. It works virtually for all financial assets. As you can see on the screen, you can see gold. So I'm going to start by explaining these indicators on the screen to you. So on the screen here, I have the moving averages. You can see 3 different periods of moving averages on my screen. And at the indicator window right here, I have my ATR and my RSI indicator. Now, talking about the RSI, we all know how it works. The RSI, it tells you the momentum of a particular financial asset, the momentum of the market, the momentum of the movement of the market. Or this ATR, the ATR indicator tells you about the volatility of a particular market, of a financial asset. So you all know that if RSI is reading above 50, it's a strong momentum. If it's reading below 50, it is strong buy momentum. If it is above 50, if it is reading below 50, it is a strong sell momentum. And if RSI is reading below 20, we know that it is an oversold level. So if RSI is reading above 80, it is in the overbought zone. But for the ATR, the more it moves upward, the more the volatility of the market. The more it moves downward this way, the less the volatility of the market. Now, this strategy I call this strategy the MATRIS strategy. The MATRIS strategy. I call it the MATRIS strategy. It's a killer strategy. It helps to kill a lot of pips in the market. I've tested it and I've confirmed it. Now, how does this strategy works? This is gold on your screen right here. Now, you all know how moving averages work. Whenever you want to use a moving average, you are going to sell, or the market is telling you a possibility of a sell momentum if price has broken below the moving averages. Can you see it? If price has broken below the moving averages, it's telling you that there's a likelihood of a sell trade, of a sell momentum. Now, before you place your sell, you have to come here to your indicator window and look at these indicators, the RSI and the ATR. As you can see, the ATR is already moving upward, which I said if ATR is moving upward, it's telling you a strong volatility, whether it is upward or downward, whether it is upward movement or downward movement. Whenever this ATR, this thick blue right here, is moving upward, it's telling you a strong momentum, so a strong volatility. So the market might be going downwards, that is, the downwards will be volatile. It might be going upward, the upward might be volatile. So it doesn't matter where the price is going to. This ATR, when it's going upward, is telling you a strong volatility, whether upward or it is downward. But for the RSI, if it's downwards, that is, it is above below 50, as it is here, it's telling you a sell momentum. I'll go again. This ATR, whenever it's going upward or it's in the upward zone, it's telling you a strong volatility. But if the ATR is downward like this, it's telling you a weak volatility. That the market is a weak volatility. That particular market is going to be weak. There won't be much movement, or much movement should be expected in such market. But for RSI, we know how it works. Whenever it's reading below 50, it's a strong sell momentum. RSI is all about the momentum, while ATR is all about the volatility of the market. So now for this particular sell trade, as you can see on your screen right here, as you can see, RSI is reading below 50, which is telling you something. Wow, RSI is likely to, the gold is likely to fall. But for further confirmation, to not get caught in the market, for further confirmation, as you can see, like I said, the ATR, when it's upward or moving upward, it's telling you a strong volatility. So be expecting some movements in the market. Now, ATR has crossed above my RSI, is heading towards up. Can you see? From this point, is heading towards the upward zone. It's telling you this movement, be it downwards or upward, is going to be volatile, very volatile. It's going to move. There's going to be movement. There's surely going to be movement in that particular market. Now, before you place your sell, always take note of these two indicators. Make sure if you are selling RSI is below, if you're selling the RSI is below the ATR. Just in this case, RSI is below the ETR. Can you see? The RSI is reading below the ETR here. And if you are buying, the RSI, which will be going upward for buying, should be above the ATR indicator. As you can see right here, even though this is a sloppy market, as you can see right here, now as you can see, the ATR right here is not moving upwards, it's moving downwards. That is why this market, this zone, this particular time, particular area, there is not much movement. Can you see? It's ranging a bit, so the ATR isn't moving upwards. If it is moving upwards, it's telling you a strong volatility, but as at this point, it's a very weak volatility because the ATR is moving downwards. Can you see? The ATR is moving downwards right here. So as you can see, the market, the gold, this particular market isn't giving much movement until this zone. Can you see? Now it started moving up again. Now so to this zone, when the ATR actually moved upward properly, kindly hold on. Let's go back to 5 minutes time frame. So this zone, when the ATR is at the upward zone and the RSI is reading above 50, like I said, you're going to buy when the RSI is reading above 50 and is above the ATR indicator. Can you see? The ATR indicator being at the upper zone is telling you a strong volatility. The RSI being above 50 is telling you a strong momentum. But you're going to confirm your buy trade if the RSI is above the ATR. Can you see it's above the ATR? Market moved from this zone upward. So this is the point. This is the point where the RSI crossed above the ATR indicator, and when it did, markets moved. You can see it when the market moved upwards a bit. So this strategy works for all financial assets. It works for currency pairs, gold, indices, but it doesn't work for volatility index because it's a bit tricky on the index. So it doesn't work for the index, it doesn't work for synthetics, but it works for indices, US stocks, also work for gold as well. So that is everything about the strategy. Just take note. The RSI is a momentum indicator, while the ATR is a volatility indicator. Let me show you guys another indication of this strategy. Show you another illustration. can see, I have right here, US 100. Can you see? Now, as at the point of my entry, if you can see clearly, as at the point of my entry, my ATR is telling me strong volatility. It's an upward zone. My RSI is telling me strong momentum as well at the upward zone above 50. Now my RSI has already crossed above. My RSI has already crossed above my indicator right here. My RSI has already crossed above my indicator right here. Can you see? Now my RSI has crossed above the ATR and it is moving upward. Look at the market. And at the same time, my moving average, my market, the price has moved above my moving average right here. So look how the market just keep going higher and higher and higher. Even though the ATR later dropped, but you wouldn't mind this because at the point of entry, the volatility was strong right here. So you wouldn't mind, and the RSI maintains the upward position. The RSI maintained an upward position. Can you see? Look how the market, look how it went up. And again, for a while, the market ranged a bit. And again, if I had closed my trade at that point, look at the chance for another re-entry. See chance for another re-entry. Now my RSI, my ATR is already moving up again after coming down. The volatility is getting strong again, and when it got strong, my RSI is reading above my indicator, my ATR right here. Can you see another upward movement? Can you see? Can you see it? Can you see another indication right here of this market is going upward? High volatility and upward momentum. Can you see? So this strategy works for all time frames. It works on all time frames, preferably 5 minutes to 30 minutes. So this strategy can be used for scalping and also to hold trades. As you can see right here, I've holding this trade since yesterday for 24 hours now. I'm still holding on to it. So thank you for watching this video. I remain Tunzi FX.